very low historic soybean stocks and a choppy market in the Chicago Mercantile Exchange. We are going to discuss that with Jerry Gidel on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you are new here, please make sure you subscribe. So Jerry, before we get into the stocks, let's talk about the Chicago Mercantile Exchange and some positions for soybeans are up and others are down. How is that?
Well, the ongoing basis here, we always seem to have different opinions going into a harvest time. This year, still quite a few people still optimistic that the issues this summer were going to create at least a limited expansion in U.S. Supplies, and the fact that the world is still loves to use protein. And so that's part of the thing on the soybean side. Corn's been a little less enthusiastic here on from the speculative side of things, primarily because of kind of the general optimism here that U.S. corn yields are still have a big potential robust situation. We did have some rain start to occur here, and particularly in the eastern corn belt. So the yield optimism is pretty strong out this direction. Not as strong out west, of course, because of the extensive drought that happened in the northern plains and impacted some of the other Midwestern states. So, but overall, the USDA increasing their September crop report. There has been a tradition of people utilizing that particular direction of the August to September U.S. corn yields as an indicator of which way we're going for the rest of the season. I think that has some validity in the past when we had more extensive U.S. Information to us. The USDA has backed off on getting August data to us. And so this is really the first data point we've had from the enumerators, the people who go out and actually do a little bit of counting and ideas about the crop. So that's another theory that for another day, but that's some of the issues we've had bouncing around this market. And this week we've had some other outside influences going on too, from the real estate development issues in China to fertilizer problems in South America, and also the high veg oil prices that have influenced the prices on a daily basis.
Yes, and getting still in the on the soybean side of things, um, we are having low historically low soybean stocks. Um, how do you assess there? Are we getting higher prices?
Well, interestingly enough, the stocks, the current September stocks report that will be coming out next Thursday, which is really the final stocks for corn and soybeans, and then also the first quarterly stocks for wheat. On the soybean side, we've been kind of creeping up over the last 3 or 4 months here. One time we were all the way down to 120 carryover stock. We're 170, 180. I'm on the 170 side of that issue myself, and that and to some extent that's taken a little issue. Overall, though, that's a very minor number comparison. Last year we had 525, and the year before that we had a extremely high one because of the Chinese switching their purchases all over South America, and then in the whole fight over trade and ideas from that was going on at the end of the previous administration, which did get settled. And now we have a really this phase one, phase two situation. It's encouraging people that we're still going to have some strong demand here from China from there. And that's really the important factor here. I think the one thing that's still keeps soybeans a little bit sluggish here is the fact that we had such a strong soybean purchases from China a year ago on the books. This time this year, we're off 20, 30% of that number. I don't think that's a terribly unattainable situation, and that their Chinese are going to be involved in, partly because of the trade agreement. And also, I think that the scenario right now, we've had the prices significantly increase over the 6 or 8 months here, particularly from last year. So everybody's going to be cautious in that. So that's why this U.S. harvest information is going to be highly important to the price activity going forward.
Yes, and on the corn and wheat side of things, we are seeing a lower stocks compared to last year, but still is a significant stock.
Well, wheat on a worldwide basis is where you look at the numbers there, and that's the one thing we've come down, of course, from where we were, 18 months ago in some of these wheat stocks, but they are pretty substantial. The twist of this is that the U.S. Has really had quite a significant twist in its levels here on stocks that we've had to deal with. We've had over 1 billion bushels kind of carried through here for a few years. And then this last year, we went down in the 800 million category. And now we're talking, 600 and maybe even a little bit under 600. I think that's the real twist that we're looking at here going forward. And the adjustment on the U.S. Wheat stocks is really coming from the fact that the wheat crop in the U.S. and particularly the Northern Plains, I think there's still some issues there that haven't totally been realized here in the data. Back in June, they always put together a U.S. planted and harvested acre number. And this year, particularly, we've had a lot of problems with available forage crops, damage to the wheat crop itself, that type of thing. And so I think that the harvested acres on wheat and the spring wheat for the U.S., and I think that's the same situation also that impacted Canada, is going to have this particular report. We also, that same day, we get what is called a small grains report. They look at wheat, they look at oats, they look at barley, and maybe some flax and some other minor ones at this point, and update their production numbers at the same day as this September 30th stocks report. And so that's the interesting twist here is that I'm anticipating maybe spring wheat to be down, 34, 35 million bushels, primarily just because of the reduced acres of being wheat being harvested, and then maybe some minor adjustments on winter wheat. And so all of a sudden that additional reduced U.S. supplies is going to potentially take our carryover stock below 500 or down to 590 on ending stocks. So I don't want to get confused here. I do myself sometimes. The September 30th report here is going to be looking at the quarterly first quarter usage, and that particular number is going to be below 1.8 billion bushels. And interestingly enough, that's the lowest number it's been since 2007 for this fall period. On a national level for the end of the year, that 590 I'm looking at has been the lowest since 2013. So there's some interesting there, but as you mentioned, the wheat market hasn't been too exciting, but I think some changes are happening here. The last few days we've started to perk up, and I think people are starting to realize that some of the U.S. supplies now there has been that type of thing. So it's a situation where I think the wheat market could become more of a leader. Switching over to the corn here and touch that particular base. The corn number also is tightened up. This will be our final production number. An overall situation. It has rose a little bit because of some lackluster late season exports and that. And to some extent, our crush has slipped a little bit during the month of August. But I'm anticipating a 1.2 billion bushel carryover stock. And that's still substantially lower than we have. It's not below the magic 1 billion number that really gets people wound up. But at the same time, it's a number that's still important that we have a good yields or at least adequate yields. I'm not sure we're going to feel the good yields even at this point. I think 178 to 180, I think, are still probably a little too far away and not attainable. At the same time, some of these yields in the Eastern Corn Belt that people were pretty optimistic about have been dinged up because of disease issues that impacted the crop late in August, early in September here. And we've had a lot of issues about stock problems and things like that in certain areas, not everywhere, but there's definitely something that's taking a little edge off some of the great yields people are anticipating here east of the Mississippi.
Yes, and continuing on wheat, you mentioned the drought, and I just read a report that says that the drought would worsen in the southern plains, and that can have an additional impact in the crop over the crop in the United States.
Yes, that's the twist that's happened this last year. The impact of the drought was really anticipated. Let's just say North and South Dakota, up into Montana. There was a few issues that it's in the central and southern plains, but I think you're kind of quoting the impact of what a La Nina weather event, which is starting to build right now in the Pacific. It's the temperature of the ocean along the equator in the Pacific, and there's lots of forecasts that that's going to be ramping up this fall and winter, and that would then indicate that that the winter wheat crop, which is primarily planted in Texas, Oklahoma, Texas, Kansas, and Colorado and Nebraska, those states could be influenced by it going forward. So I don't know if I want to blame this on climate change, but we sure have a lot of climate change in the last 18 months here on what's going on in the U.S. here and what kind of impact it might have on our various crops. But right now, at least, there's some uncertainty, even if we get the winter wheat planted here in the U.S. this fall, how good a crop we might have. Now, the one thing you don't want to get too involved on winter wheat is what the spring conditions are in our case. And the same thing around the world here, what happens in the spring in Russia, China, Europe, and Canada are also highly important on wheat. But it's going to make things quite interesting as we go forward here as to everybody's ideas about the climate have definitely got a lot more volatile than they used to be.
And what are the things you are watching for next week?
Well, of course, we'll have to see what the stocks and small grain report turn out on Thursday. And that, I think the other issues, the one thing that has been happening earlier this week that we got into some macro impacts of what happened, was going on in China and what impact that might mean on their particular buying patterns and strength of the U.S. dollar and things of that nature. Unfortunately, the real estate firm did not make its payment yesterday, and so they have a 30-day grace period. So I don't know if we're going to wait 30 days to see what happens with that. But at the same time, those kind of things have impacted things. And of course, the interesting situation has developed that popped up in here, and we'll see what kind of more news happens on that in the next few weeks, is the fact that the Belarus issues that have prompted people to put some export things from their country to other places. Brazil, particularly, because of the fact that they decided to take down that dissenter into their country, and that has started to impact their fertilizer situation in South America. And interestingly enough, Brazil's soil conditions and soybeans is not as important, but definitely highly important that they get a hold of some phosphorus and potash and things like that to utilize in there, and nitrogen for their second crop corn in the 2021 planning period, or excuse me, 22 planning period here. And I think that's going to be that issues and things like that are going to continue to be watched by the markets as we go forward. But the biggest thing is what does the U.S. farmer say about how these yields are coming? Is it better or less than expected? And I think that's will be a driving force as we look into prices over the next 2 or 3 weeks.
All right. We made it short today. Thank you, Jerry.
You bet. Take care, sir. And we'll see what next week's reports have to say and go from there.